If you're in the state of California, you've noticed a significant increase in your insurance premiums, whether for your family, for you as an individual, or your business in 2022. Do you know that insurance fraud costs families and businesses $15 billion per year in increased costs, increased taxes, increased premiums in the state of California alone? Besides tax evasion, insurance fraud is the second most costly crime throughout the whole country. In today's video, I'm going to talk about the 5 most common types according to the California Department of Insurance. The first type that's most common is automobile property fraud. This involves, most of the time, dishonest collision shops and auto body shops. Some things that they may do that's dishonest. Number 1, reporting parts of the car damaged or lost that weren't. Person brings their car in for repairs, part of an auto insurance claim, and the repair shop claims that parts of that vehicle are damaged or lost and they weren't. Number 2 is providing final cost to the insurance company that's in excess of what the original estimate provided. Number 3, and this is common from auto repair shops, is that they charge the insurance company for OEM parts when really they used aftermarket parts for the repair. Let's say you get in an accident with a BMW. Instead of using original BMW parts, they're using aftermarket parts, but billing the insurance company for original BMW parts. Number 4 under this category involves people reporting vehicles as stolen, burned, or damaged when really they weren't. Now, under the second part, automobile collisions. This is probably one that you expected more than the auto repair shop. And here's some things to look out for when it comes to automobile collision rings or fraudulent activity by people on the roads. Number 1 is a sudden stop. Somebody gets in front of you, suddenly stops, causing you to rear end them, then they go ahead and make a claim against your insurance policy. Number 2 is called swoop and squat. A fast-moving vehicle comes up in front of another vehicle that's driving in front of you. That vehicle suddenly stops, causing the vehicle in between to stop, and the third vehicle impacting the second vehicle, which then impacts the first vehicle. The vehicle in behind is going to be considered at fault because they impacted the second vehicle from behind. Number 3 involves stuffed passengers. Now, these are passengers that were not involved in the accident or in the vehicle at the time of the accident, but the claimant says that they were. That's a big part of insurance fraud under automobile collision. So the third section I want to talk about when it comes to insurance fraud in California revolves around workers' compensation fraud. Work comp fraud is widespread. It could be driven by the employee or the employer. The most common, an employee knowingly filing a claim to their employer or against the work comp carrier when it didn't happen at work. Somebody claims they got injured at work or got sick at work, but it did not happen at work. Now they're collecting benefits from a work comp provider that they should not be collecting. Number 2 is an employee claims that they can't do activities that they really can do. Number 3, an employer knowingly defrauds a work comp carrier by underreporting payroll or hiding payroll, so they're not paying premiums at the level that they should be. Very common for employer-driven work comp fraud in the state of California. Now, number 4 is fraud involving property, life, and casualty insurance. First is staged commercial and residential burglaries. Second is life insurance fraud, which involves murders to collect on life insurance premiums. Third is fraudulent natural disasters. People submit fraudulent claims when a natural disaster occurs to increase the level of their payout. Now, finally, fifth and not least, billing of medical services. In California specifically, this is a big driving factor when it comes to insurance fraud and losses to insurance companies. This involves medical providers billing for services not provided, billing for more excessive services than were really provided, otherwise known as upcoding, providing medically unnecessary services. That's terrible. Falsifying a patient's diagnosis to charge for unnecessary surgeries, medical treatments, or procedures. And fifth, accepting kickbacks. The medical provider will collect from the insurance company and then provide a kickback to the person involved in the fraud. There's 5 of the most common types of insurance fraud uncovered each year by the California Department of Insurance. $15 billion of increased costs, increased premiums, and increased taxes to families, individuals, and businesses because of these types of fraudulent situations. If you think that you know of fraud or you'd like to report any fraudulent activity to the California Department, they have great resources on their website that you can go on, submit that information to them, and they will investigate it accordingly. If you like my YouTube video, if you enjoy watching, remember to subscribe and also click that little notification bell. Thanks again. I hope to see you on another video soon.